The deficit is going to be, they revised it up. It's going to be 1.9 trillion. It's going to be about 6.5, 7% of GDP. We are spending money that we would normally spend at a rate coming out of a recession in a financial crisis. So here's the real issue. We know what happens if we go into a recession, as these numbers are clearly pointing on a weakening economy. All of a sudden, that deficit could explode even higher. What's the government going to do when we're in a recession in terms of spending money?
Well, I mean, this is a big problem going forward. I mean, probably, outside the kind of geopolitical risk and the risk of China and a BRICS unit currency, that links back to the debt, frankly. And, it really is to the degree that, again, this is where the tide has turned in terms of the 40-year downtrend in inflation and interest rates. And interest rate got to zero. The European experiment proved you can't go below zero. It sends the wrong psychological message, so on and so on and so on, right? So the trend has changed. Why? Because of the debt, all right? And here is the problem, because what is the engine of global growth to keep us on pace to service that debt, knowing that debt's going to go up because the dollar is going to come into play, and they're going to have to basically buy more bonds. I mean, if you look at the situation in the yield curve, and you look at the long end, and you look at the situation in supply and demand, where Japan could be a seller, China's dumped almost half of their bonds. This could be something where Brazil holds 80% of their reserves. They want to participate in a BRICS unit. They're going to have to dump bonds. I mean, this could be a situation where the Fed may have to whip out QE just to protect the bond market in almost a Japanese-style type of dynamic if the dollar looks like the yen just did all of a sudden when they're dumping dollars all over the world. So in that case, the debt becomes an even bigger problem. And what does that mean? More of it, because you have to do more QE to keep things in line, right? So that's the problem. And this is where the bigger picture, debasement of the dollar's purchasing power is at risk and is an issue and is almost like a one-way train. And this is why, I keep talking about this now, really we started this in 2018, but it's really become more intense, obviously, the last 2 to 3 years, that just being passively long the stock market is going to probably produce profits because the dollar down is going to be bullish for stocks. They're going to love it. It's not going to keep pace with the devaluation and purchasing power of the dollar itself. So you're not going to be getting richer in dollar purchasing terms, so you're going to have to spend more money to buy everything. And what does that look like? That looks like an emerging market country that has a currency crisis. And we're kind of headed that way. And the debt's a big part of it. And you know what, again,